some people know that I'm also a musician, a very amateur musician, and I play the guitar. And Sergio invited me to come on the stage with my guitar, right? I refused it, but maybe next year we're going to do that, and then we can, be up to David's expectation to play Hard Way to Hell on the stage. Let's see if next year we can do that. But now let's get back to the topic that I brought today for you, which is navigating digital payments. Before we get into the details of it, give me a chance to give you a bit of an overview about who Worldline is. Some people may know it. I also gave this information last year, but I think it's good to, to say it again. So we are a paytech company, a European based paytech company listed on the French stock exchange, 4.6 billion revenue, 18,000 employees present in 40 countries. So you can see up there the numbers. What I want to say that we are a significant player on the market. Number one in terms of our revenues and our volumes at the European level, and we are qualifying to be number 4 at worldwide level. We have certain solutions and services, right? On one hand, we support cards. Everything that is about cards is within our pocket, within our portfolio, and with our clients. Then we are also supporting account-based payments, instant payments. We have solutions, services, everything you need in order to bring instant payments, whether they are in local currency or they are in euro currency, domestic and cross-border. SWIFT Service Bureau, there are many things inside there. And then we have the third category, which we are calling digital services. Open banking is there, identity and authentication, many things. I'm not going to get into the details. What I wanted to do with this is to give you an overview and give you a feeling about what we are doing. Having that said, I'd like to navigate you through a couple of topics, right? Surrounding the payments. On one hand, I will navigate you through instant payments a little bit. We get into the open banking space. I will talk a little bit about digital euro, CBDC. A bit about artificial intelligence. We have heard about it in David's presentation. And a bit about strategic partnerships, because we believe that strategic partnerships are extremely important nowadays. So let's put in our GPS then the first coordinates related to instant payments. As you know, there is an instant payment regulation, a Euro instant payment regulation on the market. Actually, that entered into force in April this year, and it has certain deadlines. I will come back to that. But what is inside? What it is about? It is about that instant payments, Euro instant payments, are going to be mandatory for all of the banks, all of the financial institutions, PSPs as well, to be uptaken. They will have to implement it with a certain deadline. Instant payments have to be affordable. What does it mean? In some countries, there are instant payments even currently, but they cost much more than ordinary transfers, which are arriving the next day. They are not arriving instantly. So the pricing has to be harmonized. This means an instant payment transaction cannot cost more than an ordinary credit transfer. Then the third main element is the verification of the payee. This is a fraud prevention element, which is that when we are making a transfer, we need to verify the identity, the name of the payee to whom we are transferring the money. And then the fourth one is actually the sanction screening. Even now, we have sanction screening, right? But the rules of the sanction screening are going to be changed based on this instant payment regulation, which is not to screen anymore the transactions, or not only the transactions, but to screen the users on an everyday basis, continuously, not only when they are making transfers, but have them screened continuously. So this is implying a change in the sanction screening process. if we are looking at the deadlines, there are certain deadlines for the Eurozone and for the non-Eurozone countries. For the non-Eurozone countries, which is Romania as well, and a few other countries, is going to be 2027. For the Eurozone countries, is 2025. For receiving, respectively, for sending, there are different deadlines. So the banks have to comply with these regulations. There is never too late to start, and never too early to start, in fact. So I recommend the banks to start as early as possible complying with this regulation, because it's coming. What about us? What about Worldline? What do we do? How do we support this? Of course, we have different solutions and services in order to make the banks compliant with the instant payment regulation. We can deploy the needed elements, the back office options, the back office solutions for them in order to achieve compliance with this, and not only compliance, but in order to benefit out the Euro instant payments. Besides that, we also ensure the connectivity to the ECB's TIPS, Target Instant Payment solution. So we have the possibility to interconnect banks as well as clearing houses with the needed infrastructure to support Euro instant payments. And then, of course, the verification of payee, that's something which we also grant. We are granting to the banks as well as to different other institutions, whether we are talking about a domestic one or we are talking a European one, or interconnecting the European world, with the domestic world. So we have everything we need there, and many of the banks already benefit of all of our solutions. A next navigation point. Of course, we have a stand outside, so if you have any questions related to any of the topics, I'm always happy to give you more details. To be cautious of time, so open banking. Well, yes, open banking is an interesting topic, right? It's around us. Banks are using, fintechs are using. What's going to happen with it? Some people predict that this is not the direction. Others say that this is the direction. There is one thing which is sure, is that open banking has been put in place for 3 reasons. One of them is to bring security on the market, to make transactions as secure as possible, respectively to bring more competition on the market. Do the banks like that? Well, if it's coming from the fintech world, they don't really like it. If it's them using it, of course, they like it a lot. It depends always on the use case, and it depends, on the benefits that they may have, because they can bring a lot of innovation on the market. What about the regulatory framework? So, is really open banking dead? In my opinion, is not. We may have different opinions. Why it is not? It's not because it's progressing. We have PSD2 currently as the governing regulation, but PSD3 is coming, and it's even getting, more complex. So the succession is that PSD3 together with PSR, which is the Payment Services Regulation, so it's split now into 2 elements. I will give you more details what they mean. And there is then a framework which is being attached to it, which is the FIDA, Financial Data Access Framework, which is practically complementing what is being currently done related to account services. It's bringing this open context into other financial elements, pensions, loans, and many others. What about the PSD3? So this is actually related to the licensing and supervision of the payment institutions. There are a couple of elements, like the electronic money institutions will go under the payment institutions from the structural point of view, from the regulatory framework point of view. And even the existing payment institutions, those that have a license and have been certified under PSD2, they will have to recertify under PSD3. So it's it's coming, and it's keeping them busy for sure. And then there is a third element, which is that practically any merchant can dispense money. So there will be a possibility to withdraw money up to a value of up to 50 euro without any type of license. So it's a kind of a cashback-like opportunity for the merchants to serve clients with. This is the PSD3, and then when it comes to the PSR, Payment Services Regulation element, okay, there are lots of things here. I'm not going to get into all of the details, but I will highlight a couple of them from each section. So, as we discussed, financial institutions are not that happy about this PSD2, right? They have to give access to the data of their clients to third parties. And therefore, they were interpreting, customer authentication, strong customer authentications in a different way, not making it very comfortable for third parties to access the data. Well, PSD3 is going to solve this problem because they will impose the harmonization across all financial institutions of the rules which they have to use. And in case they're not going to be compliant, there's going to be sanctions put in place, penalties. So it's not anymore that it was before. It will be different certainly than it was before, and that will be a challenge for everybody. But it's going to be in the benefit of the market, in the benefit of the open banking concept. Looking at the protection part, verification of payee, right? So again, what we just said for the instant payment regulation is also coming within the open banking framework for the PIS. Verification of pay has to be put in place, has to exist also there. So there are two reasons why verification pay should be there. Again, not only within a country, but at the entire European economic area. And then for the competitiveness, well, there have to be dashboards, right? There have to be dashboards. So when I'm giving a permission to a third party to access my account, I'd like to see, and I will have the opportunity to see who accessed my account and also disable, respectively keep it enabled. But there are multiple other things. I will not go into the details to be cautious of time. So there is a timeline for it, for the implementation. As you can see, somewhere at the beginning of next year, the PSD3 and PSR are going to enter into force. And then, of course, the countries will have some time, usually 18 months, to transpose the regulation into the local regulation. And then somewhere at the end of 2026, the regulation will take effect. So then it will have to be applied. What about Worldline? So what do we do here? Well, we ensure compliance for the banks. We have a compliance hub to which we have multiple banks connected. We are publishing their APIs, provide a sandbox, provide the documentation. So they don't need to take care about that. We take care of that ourselves for them or on their behalf. We are interconnected. We have a connection hub. We are interconnected with over 3,500 financial institutions in 21 countries. And we can provide access to any third party, can be a bank, can be a fintech, to reach the data of different clients of different banks. Respectively, again, the verification of pay, just like for the instant payments, we have that available and we can grant it. And with this, I'm ending my navigation within the open banking space and navigating to the next topic, which is the digital euro, CBDC, central bank digital currency. According to the legislative proposal which was published last year, more than a year ago, the digital euro would become an equivalent central bank currency to the euro banknotes and coins. How would it work? What does it mean? Well, actually, in order to be able to have digital euro in our pockets, there is a need of an account. This account can be opened, either with a commercial bank or with an electronic money institution or even with the central bank. Depends on the business models which are implemented on the market. What you have to know is that there is an ongoing, each and every country is analyzing the possible adoption of the digital currencies. It's not just about euro, right? There are about 135 different central banks and different organizations who are looking into a possible implementation. So getting back to the digital euro, again, there is a need of an account for it. And obviously, there is a need of an instrument, a digital wallet, which could also be a physical card, actually, in order to hold the digital currency. So on one hand, we need to fund this wallet, right? It can be funded from an ATM, from different public services, or even from a current account. But what is important is not commercial bank money. It's money taken away from the opportunity for a bank to use it. It's like cash, yeah? We withdraw cash, nobody else can use it, we can use it only. So it's the similar concept here. And what about the spending of this money? So there could be several opportunities, spending it online, in store. We can do a cash conversion. We can go to the ATM and do a cash conversion from our digital currency. We can do peer-to-pay payments, offline payments. Some of you may know that we as Worldline, we participated in the Digital Euro project in building the prototype, especially the offline prototype for ECB. And we managed to build the proof of, to get to the proof of concept and to indicate how this could be used. As a next step, actually, well, there was an investigation phase for the digital euro. This is in which we participated in build the offline prototype, ended a year ago. And now we are in the preparation phase. This means that practically the rule book is being finalized, the providers are being selected, and there will be a need of a decision to move forward, right? To issue the digital euro, and then to go to the second phase of the preparatory phase, which is to develop it and to roll it out. It says to be defined for the timeline, but practically this is another 2-year period. So usually they are thinking in 2 years period. So the goal is that by 2027 we might have digital euro in circulation. What do we do? Well, we have a fully fledged solution for supporting digital currencies for the implementation of digital euro or digital anything. Not only central bank digital currencies, but could be also stable coins, whatever, within the regulated world. A bit about artificial intelligence, if you allow me. I will navigate you a little bit, not very long, not very deep into that, but I think it's very important. Everybody is talking about, everybody is considering that in a certain way. What it means for artificial intelligence, some people may associate this to generative AI, to ChatGPT. That's what we use probably in most of the cases. But of course, artificial intelligence means many other things. It means machine learning, deep learning, and a couple of other things. I'm not going to get into the details again, just to indicate that it's a very large topic that we are talking about. And as you know, there is an artificial intelligence, a EU Artificial Intelligence Act, which entered into force on the 1st of August this year. and it has certain implementation timelines, as indicated on the screen. Within the 6 months' time, it regulates how it can be used on high-risk systems. Then within 1 year, it applies to the companies who are providing generative AI models, and so on, so on. So there is a 3 years implementation time. And actually, we have to be very careful with the AI, as there are certain rules which have to be considered. Like, for example, they cannot be used for purposeful manipulation. We cannot use it for manipulating humans, right? And many others. Just look at how many things are prohibited in there. So we have to be careful, very careful with AI, how we are using AI, and what do we do with it. We as Worldline, we are also using AI for a couple of things, for many things, but I just put on the screen, some of them. Of course, within the open banking framework that we are using, we are providing instant credit risk analysis, which means really instant score for scoring anybody, right? Whether we are talking about a merchant place or we are talking in a banking environment, scoring the clients of other banks, right? So that's the point here, because the banks have the information about their clients, but when a new possible client comes in, to evaluate, to get the details of that person is sometimes harder. It takes time. With the use of this solution, it can be immediate. We use it for fraud management, for deep learning, risk-based authentication within our ACS framework, 3D Secure ACS framework. And of course, we have a chatbot solution, which we are providing to our clients, in which AI is embedded also there. So there are quite some areas in which we can use it. There are many more, but let me stop here about it. A next navigation element for us is the partnerships. We value a lot the partnerships. And not only when we are the partners of our clients, but we also have partners with whom we are working. It's been a year now since we announced our partnership with Google. Well, it was in January, but actually the announcement was in January, but the partnership started 1 year ago. We just celebrated 1 year. What does it mean? Why do we, as Worldline, as a provider partners with Google? Well, there are several reasons for that. We are trying to optimize our activities and our processes, and of course our costs. And by partnering with Google, we managed to do that. So it's two-sided. We are utilizing Google's technology, Google Cloud, right? We are putting as many products, as many services, as many solutions into the cloud in order to gain efficiency, security, and everything that is needed for us to operate. Also, so everything that we need in order to operate in an efficient way, it's actually targeting this direction. On the other hand, Google is using our payment technology in order to serve their clients with payments. So it's a two-sided. We are each other's clients from different point of view, but we believe that this partnership brought a lot of advantages for us and for them as well. And we are rolling out step by step more and more markets together in order to serve their clients, respectively serve our clients. We have a global go-to-market strategy. And of course, we are also innovating together. We are co-innovating, especially in the space of AI. They have a lot of data, which can be very much utilized for our payment solutions. And we have the payment solutions that can utilize their data. So it's, again, it's it's a two-sided relationship that we have. This is a quite global relationship, but we are looking also not only for global relationship, we are looking for more regional relationships. And when it comes to Worldline in Central Eastern Europe, I mentioned this already at the last event last year, but allow me to mention this again this year, because we are really, really progressing with this partnership. So we established a partnership with Printec Group, which is for 16 countries across the Central Eastern European region. We have a common offering in order to serve financial institutions with all sorts of products. All what you have seen at the beginning as a product portfolio from us is available through Printec. And there is much more that Printec can add to that. And the value can be even higher by that. I'm very happy to provide you with further details. We also have Printec representatives here. Janusz Christia is with us. So if you are interested to learn more about this partnership, we are happy to provide you with that. My last slide is about the conclusion, right? I will make it short. As you can see, digital payments are evolving. The regulatory framework is evolving, and the needs that the banks have to come up with are also evolving. And partnerships are essential for everybody, not only for us, but the banks, the financial institutions. Partnerships are also really key in order to survive against the more and more dominating fintechs. That's why we are here to support you, to support financial institutions to win this battle. Thank you very much for your attention. And we have the stand. We are always available to have discussions.
Thank you. Thank you very much, Ernest. Thank you. Thank you for this interesting